Welcome to Everyday Investor. My name's Nicole Edmonds and I'm filling in today for Rav Tour. Today we have a really interesting show for you. We're going to be talking about how we can make money by being the bank. It's a very passive strategy and a very interesting one. Don't go anywhere. Everyday Investor begins in a moment. On this episode, Carmen Campagnaro teaches us how we can make money by being the bank.
A lot of people don't realize that you can lend your money privately to individuals like yourself, myself, or others. And if you can borrow money at the bank at, let's say, 4%, you can lend your money to somebody else who's looking for a mortgage privately and make the difference on that spread.
Everyday Investor is brought to you by Clover Properties Rent to Own. Invest with a purpose. Sam McDaddy Real Estate. Full service brokerage for all your buying, selling, and investing needs. Welcome back to Everyday Investor. Remember, before getting started with any investment opportunity, you always want to ask 4 questions to start. 1, what is my return on investment? 2, when do I get that return along with the money I put in? 3, what is the minimum cash amount needed? And 4, what is the risk in the worst case scenario? We have a really interesting show for you today. We're going to be learning how we can make money by being the bank. We have Carmen Campagnaro on the show, and I'm very excited, Carmen, to have you here. Well, thanks very much.
Thank you for having me. It's always a pleasure.
So, Carmen, we're going to talk about being the bank, but I really want you to share with us, because we've been talking about it a little bit, how you got started. We're going to talk about, mortgages and lending, but you actually didn't start in the whole real estate game. You actually started kind of as an entrepreneur. Is that right?
Yes, I've been an entrepreneur my whole life. Actually, I even started when I was, I think, 9 or 10. And I'll tell you this little story.
Okay.
I got in a lot of trouble for it, but I'll tell you anyway. My girlfriend and I were riding our bikes and we were going home and we took a shortcut through a graveyard and there was this massive pile of flowers sitting there and they were in the garbage. So I didn't think it would be a bad thing if we took them. So we took them, put them on top of our bike as much as we could, and we rode our bikes home and we cleaned them up and wrapped them all up in newspaper and went door to door selling them.
Oh my gosh.
Yeah, and then we sold one to a florist and she contacted our parents and we got in trouble. But yeah, that was the very beginning.
Yeah,
the very
since a
beginning.
very young age you were entrepreneurial.
Yeah, it's been an interesting journey, but I have never worked for anybody else in my entire life. So I've been an entrepreneur forever.
Yeah. And so what turned you into the real estate business, the mortgage business?
Well, when I was 18, I invested in my first property and I bought a house in Burlington. So I lived in London, Ontario. I purchased my first property in Burlington, Ontario. I lived there for a little while and then I ended up selling it. Now I did go in with my dad, so we partnered.
Yeah.
And I did inherit a small amount of money when I turned 18. So I used that money rather than blowing it on everything else. I said, okay, I'm going to invest it, and I invested a portion of it into the video business, and then I bought a house. And that house, that was my first investment, I sold it for a $100,000 profit. It was quite incredible. So for somebody that was 18, 19 at that point, that was a huge amount of money.
Yeah.
And I took that and then I bought myself a duplex and I lived on the main floor and rented out the top. And I just kept rolling with the real estate that way, and that's how it started.
Yeah.
And then in the mortgage business, so a friend of mine was in the industry and he said, you know what, you should really get into mortgage lending, be a mortgage broker. And I said, mortgages? Because I was just out of the clothing business. And I said, okay. So I went back to school, got my license, and started off in my basement in a very modest home. I had a fold-out table, my fax machine. That'll date me a bit, but that's okay. And my washer and dryer, and the kids running around screaming upstairs, and that's how I started my business. And it just rolled. So what happened was, I had an ad in a local newspaper and I said, financing, call me. And I was very, very motivated to do a deal. And this guy called me and he wanted a mortgage on this really crappy property in Hamilton. And if people know Hamilton, it's on John and Barton Street, so it's a really tough neighborhood. Then specifically, because now it's kind of regentrified, but nobody would do the deal. And I went all over the place. And I think I ended up with a Mennonite credit union out in Winnipeg somewhere, and they ended up funding it. And which was crazy. I don't know how that even happened. But anyways, he was so thrilled that I got this done for him. He put my name on the overhead projector and he spoke to a class of 150 people a month. And all of a sudden, boom, all these people were coming to me because he was so thrilled that I actually took the time and got it done for him. So it's quite a story.
Yeah, you have a very, very interesting storyline to get up to than where you are now.
Yes.
So on this episode, we're going to talk about being the bank. So tell us, what does that mean?
Well, a lot of people don't realize that you can lend your money privately to individuals like yourself, myself, or others. And if you can borrow money at the bank at, let's say, 4%, and today it's a lot less. We know that. We can probably get something at 2.5%, but let's use 4% as an example. You can lend your money to somebody else who's looking for a mortgage privately and make the difference on that spread. And that's what the banks do. So the banks they have their funds coming in, and they pay X amount of dollars and they put it out at a higher amount, and they're making the spread. So we can do the same thing with private lending.
Okay.
And it's an awesome investment vehicle. And so many people aren't even aware that that exists. And I think the key thing is for people that they're doing this or lending through a reputable company, and not just lending your money to anybody. You need to do your due diligence throughout the whole process. So that's a really important part of the whole thing.
Okay, so what we're talking about is where somebody has their home, has equity in their home, takes a mortgage out, lends it to somebody else, and then a broker or brokerage is the one kind of looking over the deal.
Yeah. What would happen, for example, our company would receive a request for a mortgage privately.
Okay.
And people always think, why the heck would I pay 14% interest on money? That's ludicrous, where I can get money for 2, 3, 4% interest.
Right.
Well, there's many scenarios for that. So in many cases, real estate investors, which is the majority of what we work with, myself, I borrow private money all the time. And the reason I borrow private money is because I can close really quickly, and it increases my chances of getting a better deal on what I'm looking at buying.
Okay.
I have negotiating power. I can actually go in, offer, quick closing, no conditions, right? I can go in and do this. Now, I'm not suggesting people do that. I'm doing it because I understand the business very well, but I can go in and negotiate. It's my buying power.
Yeah, because you've got access to those funds.
It's cash, right?
Easily, right away.
Yeah. And you can borrow that money, and I know all the options that we have to do this, and that's why I want to share this with our viewers of how valuable this is.
So talk a little bit more about who those people are that are paying the 14%. What are they doing? Are they doing it for really short term, or are they doing flips? What does that usually look like?
So if anyone is going to be paying 9, 10, 11, 12, 14, 15, 16% on their money, because that's typically what we're paying our lenders, anywhere between 11 and 16% return on their money.
That's the return that the lenders are getting?
Yeah, so if you are acting as a bank and you're going to lend your money, those are the types of returns that you're expecting.
Wow.
But the most important thing is to understand who you're lending your money to.
Yes.
Right? The risk and
your security and all that.
Exactly. And we can go through all of that after.
Okay.
But the type of people would be real estate investors, for an example, and let's say they have a quick closing on a property, and let's say they got a great deal on that property. Maybe they paid 50, 100, 200,000 below market, or maybe the property's in disrepair and it needs renovations, but you don't want to go to a bank with a property that's like that, or maybe the bank won't even finance that property because it looks like that. So what you would do is you would say, okay, Carmen, I need $300,000 to buy this property, and that includes any renovations that I need to do, and when I'm done, it's going to be worth $500,000. And I said, okay, sure, sounds good. So we'll do our due diligence on that deal specific, and then we send it out to our investors, and investors can invest in that, and they know they have security on that real estate. They actually have a registered charge.
Oh, they do?
Yeah, so it's a really interesting investment vehicle for people.
Yeah.
And so many people, I say it again and again, don't even understand that you can do this.
Yeah.
They don't even know it exists.
Yeah. Okay.
Right, so it's pretty interesting.
Yeah, so we'll get more into the nitty-gritty of how this works. We're going to take a quick break in a minute here, but before we do, I just wanted to touch on this as well. You, in your business now, it's kind of a family affair, isn't it?
Yeah.
You brought your kids into it.
Yeah,
Can you talk a bit about that?
I've always wanted that.
Yeah.
And I'm so fortunate that I have my kids that actually work in my business. My daughter's the VP of lending,
Yeah.
of private lending, and she's amazing. She does such a great job, and I'm not saying that just because she's my daughter, but she does work with the company. And then my son's also in real estate, so he's now a realtor, and he handles a lot of our investment properties and things like that.
Very
so,
cool. That's very neat.
Yeah.
And your daughter is also a host with you on your show, 30 Minutes to Wealth.
She is. 30 Minutes to Wealth.
Yeah.
She's amazing.
Awesome.
I know, it's such an amazing thing. I get to be with my kids.
It is.
All the time.
Yeah, that's
I know,
wonderful.
I know.
So we're going to take a quick break
Okay.
here. When we come back, more on Being the Bank with Carmen Campagnaro. Everyday Investor is brought to you by Clover Properties Rent to Own. Invest with a purpose. Sam McDaddy Real Estate. Full service brokerage for all your buying, selling, and investing needs. Welcome back to Everyday Investor. We're talking with Carmen Campagnaro, and we're talking about how we can make money by being the bank. So, Carmen, you're the president and founder of ProFunds Mortgages, so you deal with these types of deals a lot.
Yes.
So tell us, how does the process work from kind of an investor standpoint and getting one of these deals done?
Right. So say, for example, you wanted to get involved in private lending. You can either use cash or registered funds, RSPs. Cash.
You can.
Oh,
you can
yeah.
use RSPs.
Absolutely.
Is that like anything registered?
TFSA, yes.
Wow,
all of that,
okay.
Lyra. So you do have to be through an institution that will allow for you to self-direct.
Yeah.
And we work with specific companies. So if you were interested, we would let you know who those companies are and then get you started on doing all the paperwork. If you're interested in refinancing your house, we do that as well in-house. So we are a mortgage brokerage.
Right.
That's what we do. We do residential financing, we do commercial financing, and we do private lending. So let's say you want to refinance your house and take out some of your equity. We would achieve a good rate for you. And then at that point in time, you say, okay, Carmen, I'm ready. I have my money sitting in my bank account. I'm ready to go. And then I would say, okay, Nikki, like, what's your risk level? Like, and what's your situation? And we'll just assess your situation to kind of know your client and see what your objectives are. And then once we have all that down, then what we do is we gather the deals. So we get a lot of deals that come through the company, people looking for money. So they might come through other mortgage brokers, or the client might come directly to the company, and we have an underwriting process. So we have a team of underwriters that will take a look at the deal, and we do our due diligence first before we present it to you.
Okay.
So the team will ask for an appraisal on the property, a current appraisal. They will ask for income from the person that's borrowing the money. Are they able to make the mortgage payments on this property, on this mortgage? And what is the exit on the property? So there's many things that we look at that we want to make sure that is in place before we bring it to you. Now, you are the lender. You don't lend the money to ProFunds, so you are actually making the decision. So you will receive the package and you make the decision on whether you like it or if you have any further questions on that property or that mortgage investment, so that you can be clear, you understand, you're making that decision. So we go through our own process. We've been in the business for a long time. We know it quite well. So we would say, yeah, we feel comfortable with this one. Here is everything, income, credit bureau, the use of funds, exit, all of it, and then you say, yes, I'm ready to go, and then we have to draft up all the paperwork. It then goes to a law firm, and then the law firm actually closes the deal. So this is a mortgage, just like the bank gets a mortgage on your house when they do a mortgage. Just because it's private, that doesn't mean we don't. We do. You're secured on the property. Okay. So it's a registered charge on the property. So, for example, if they sell the property, they have to pay out your mortgage before it can transfer title to somebody else. If they want to borrow any more money, we have to pay us out first. So nothing can happen there unless we consent or they pay us out.
Okay.
So they actually have security on the real estate. It's tangible.
Right.
It's not just like a stock or something like that.
Yeah, how you said the company goes through all that due diligence and your underwriting team, and it's so important because as an investor, I'm not an expert on those things, right? I don't know what to ask, and a deal could look good, but it could be presented in a certain way that I could be fooled. So you have to work with a company that...
You know, I want to talk about the risk as well, but there are things, things could go wrong. Like someone could stop making their mortgage payment, but at least we have recourse, which means we actually can sell the property and get our money out.
Right.
Right.
That's our collateral.
That's our security.
Yeah.
And so it's a pretty good thing, and the returns are substantial. But it's just a matter of, and I think the biggest and most important thing is the loan that you're lending to the value of the real estate.
Okay.
That's the key, because if indeed anything ever did go wrong, you want to make sure that there's enough in there to sell it, pay a real estate agent, pay maybe tax arrears, and have enough then to pay out your mortgage and any interest owing on it.
Okay, so yeah, talk a little bit more about that, the loan to value or LTV.
Yes.
What's a common loan to value that you guys are doing?
Well, it differs quite a bit. So, and it's not just black and white like that. And specifically in private lending, there has to be some flexibility on certain things. Like, we're not the bank. We are charging 12%, 13% interest. So there has to be a little bit more flexibility on what we're lending to. But I'm comfortable around the 80% range. Sometimes 85, depending on the person. So let's say you come to me and you've got great credit, you've got a great job, you've got good income, you have other assets, and you want to buy this house and you're going to renovate it, and you've done 5 before, and I know you've got a great track record and I've worked with you for a long time, I'm going to give you 85%. Okay. But if it's somebody else that maybe doesn't have great credit, we don't have a track record, and they're leveraging themselves quite high, we would say maybe we're only going to go 70, 75%, depending on the person. So every deal's a little different, and it's hard to say, max, but max would be about 85%.
Okay, so that means from an investor standpoint that there's 15% in there in the property that the owner has put as a down payment or something, and then so that if you have to take it over, you've got that cushion.
Exactly.
Okay. So let's talk a little bit. We touched briefly on numbers. We talked about returns in the last segment. You had said you could kind of expect a return between maybe 11 to 16% from being the bank.
Well,
so let's do an example and kind of go through some numbers. So
okay,
see how it works.
I'll tell you what the returns would be. So there are a couple different options in private lending. So you could actually lend your money as a first mortgage. Okay, and a first mortgage at 50, 60, 70% loan to the value, which means the amount of money you're giving versus the appraised value that we get
is 50 or 60%.
Yeah, so up to 70, even 75. The returns would be anywhere between, let's say, 7 and 11.
Okay.
Depending.
Yeah.
And then a second mortgage, which means maybe a bank is in first.
Yeah.
And we're going to register a second mortgage, and let's say up to 80%.
Yeah.
The returns would be anywhere from 13, 14, 15, 16%. Okay, so that's the difference between the two. So you could be anywhere from 8 to 16% on your money in this investment vehicle.
In the idea of being the bank, we take money out of our house, or we refinance our house. So now we're borrowing from kind of a low interest lender.
Institutional lender.
Yep, and we're paying, let's say 4%. Okay.
That's keep it easy, but it's a lot lower than that today, but yes.
So, we'll be conservative and we'll say 4%. So say you've borrowed, for simplicity, $100,000, and we're paying 4%, but now we're investing it, say, on a second mortgage at 14%. Okay, so we've got $100,000 that we've taken out of our home. We're borrowing it at 4%, and now we're making back 14%.
Correct.
So we still have to pay the money that the interest rate that we've borrowed.
Yes.
So that's 4%. So we're making the 10% spread. So
correct.
So that gets us $10,000 in profit.
Yes.
And we're doing nothing.
Nothing. It's literally while you're sleeping.
Right.
You're earning interest.
Yeah.
It's lovely.
It is lovely.
It is lovely.
And I like that it's, RSP eligible. A lot of people are not making a return close to that in their RSPs. So if they can get it out there, it's...
Exactly. It's amazing. So with the RSPs, you have to be registered with a specific plan holder that will allow you to self-direct, as I mentioned earlier. All the interest payments go back into the plan. So your plan can earn those returns, and it just grows substantially. So it's a great way as well to invest is through your registered funds or LIRA, RESPs, all of that.
Yeah.
So it's great.
I want to tell you about a deal that I did.
Okay.
So it was a 1-year deal.
Yep.
And so what I did was I actually borrowed the money against a 1% credit card. Okay, 1% promotional rate credit card. And then I lent it at 19%.
19?
Yep.
Is that from our office?
It was it was through your
office. Well,
office.
we do get those deals.
Yeah.
Okay.
Yeah, and so I paid the 1%, and then I made the 18% spread. So I was very excited.
And then did you pay it off completely?
And then I paid it off, because the deal paid it off, and then made the 18% spread.
Wow,
so
that's sweet.
I was very excited about it.
Wow.
It was a good trip that year.
That is. Yeah, we have a lot of clients that, privately lend. Like I've got clients that have been doing this for years, very seasoned people, and then very new people to the industry. And private lenders, that's their career. That's what they do. That's their life.
Yeah.
And they just lend their money.
Yeah,
and
it's a good plan.
It is. It's phenomenal.
So we're close to running out of time here, Carmen. But
I've got so much more to say.
Yeah, before we do, I just want you to, touch briefly on the risk.
Right. Yeah. So we mentioned earlier that you have the security. So note when you're lending your money, it always goes through a law firm that's representing your interests.
Yeah.
Okay.
Yeah.
So that lawyer there will take search title, see if there's any issues on the property, maybe any easements or anything else that's on there that might pose a problem for you. They are the ones that will do make sure that the taxes are up to date and insurance is in place and all those sort of things. They register the mortgage. Okay. So risk. Let's say, for example, somebody doesn't make their mortgage payment and they stop paying, which it can happen. That's the nature of our industry.
Yeah.
So I want to say to people, if you're lending in this vehicle, it's not a push a button like sell a stock, you're going to get paid out on exactly that day. There could be delays, right? So people have to keep that in mind when you're doing this. They have to be flexible with the funds that they invest.
Yeah.
But let's say something does happen, there's a process that we follow, and it would be issuing a notice of sale, and then now I'm putting this very simply because I know we don't have a ton of time, but then we would list the property for sale, and then from the proceeds, the investor would get their money back.
Out.
Now, in first priority, it would be property taxes, arrears, if there's anything like that, the mortgage payments, and then any interest owing would be the last.
Oh, would be last. Okay.
Yeah. So.
Okay. Very good. Well, thank you so much. It's always so fun having you on the show, Carmen, and learning from you. So thanks so much for coming.
Yes.
And thank you to our audience. Whether you're watching on TV, online, or through our podcast, thanks very much for tuning in. To sign up to become an Everyday Investor Insider to receive exclusive investment opportunities, tips, and advice, visit our website at everydayinvestor.com. We'll see you next week.